Let me welcome on board Dipan Mehta as well and find out what he's making of the market in various sectors right now. Dipan, hi, afternoon. Just taking a leaf from Ambuja and the stake buy from Ultratech of India Cements. Just wanted to understand whether you think there's more consolidation to go in the industry, or this is pretty much it, wherein, the pecking order of the cement players is pretty much a given now.
Good afternoon, and thank you for having me on your show. I think consolidation can always take place because there are so many cement companies. More than 50, 60 cement companies are there. So consolidation is a process. But yes, I think the large ones, the low-hanging fruit is all over and done with. And as we have seen with every acquisition and consolidation within the cement space, it gets more and more expensive. Like a lot of analysts feel that Ultratech acquisition of India Cement was more expensive. It's just that existing cement owners become more picky, and the assets get more scarce. So the larger company like Ultratech, ACC, Ambuja, who want to grow at any cost, they'll have to pay higher and higher premium. So it's a process. I don't think it's over and done with. But what is very clear from the cement numbers so far is that by and large, I think they are in a very slow season per se. And at the same time, the volumes are high, but realizations are low, which means that the competitive intensity is just increased. And yet the cement companies want to keep on expanding capacity. So I don't think that this situation is going to ease out in the near future.
Taken. In fact, this morning itself, there was that news that JSW is looking at cementing its business amidst the consolidation wave. And there was that chatter that perhaps Orient Cement could be one of those assets that JSW Group might be looking at. So definitely watching out for more consolidation in the entire cement pack. But Dipan, just wanted your take regarding, some of these, consultation papers that we saw last evening, of course, talking about the speculative trading and the methods to curb that. What do you make of that?
Yeah, I think on all my WhatsApp groups, that's all the chatter is all about, the consultation paper. And I'm sure brokers will be putting up their response to the consultation paper. But yes, it's going to cause a lot of stress in the options market. But it's going to impact is going to be restricted to a few broking companies. And on the whole, I don't think it's detrimental to a fundamental analyst like us or a long-term investor who comes into the market through mutual funds, PMS, or doing research-based investing. So it's a bit of a tricky issue within the capital market industry. It was a situation which had to be curbed, and of course, SEBI has suggested some steps. Let's see whether they actually work out, because the speculation is such that once it gets going, any number of barricades you put doesn't really stop it so long as it's profitable. And unless it doesn't get profitable, it will not stop. So let's see how it plays out. But for the time being, I think some of the pure play brokerages, the discount brokers, are going to feel the heat of lower volumes and lower brokerage income.
Pricing is some of these companies are actually holding comfortably in the green today. Like one would have assumed that BSE might be under pressure, might not take it well. That stock was up 6%. KFin Technologies, which of course does not get directly impacted, but they do have the RTA business, which might get impacted through the ripple effects. That stock is in focus. You also have Angel When that continues to hold quite okay. 361 is actually in the green right now, 3% higher. So come hail or storm, clearly some of these stocks just continue to inch higher for now. The other space which is doing quite well is life insurance, and then comes some of your pharma names. So apart from Ajanta and granules that we're talking about, there's a Suven Pharma which is comfortably up, there's a Gland Pharma which is up 4%, and a lot of other names as well. Anything specifically that you're picking up in the pharma space right now, Dipan?
Yeah, I saw the numbers across the board. Pharma, some with exceptionally good numbers, and 2, 3 numbers which really were quite decent. One is a large cap company. I thought Cipla came out with a good set of numbers. Dr. Reddy was okay. Management commentary is extremely positive, and they made an interesting acquisition. But amongst the mid cap pharma, the stunner was Strides Pharma, and they came with a superb set of numbers. It's been a great value creator in the past. The CEO Arun Kumar has been known to identify the right trends in the pharma industry and create a lot of wealth and value for his shareholders in the past. So that's a company worth watching. It's not a recommendation, but I think it should be on the watch list of many investors. And the kind of guidances which they have given And coming from a management which has a proven track record, I think this company could go places. And clearly, I think they've got the strategy right after many, many years of trying to figure out what exactly to do after they sold off most of the businesses. Valuation wise, it is reasonable if you extrapolate what earnings potential is there in the company. And I think investors should definitely get overweight on pharma. I thought even Mankind's deal for the Serum Institute, the BSV, Bharat Serum, that also was very interesting. And if you're a really long-term player, I think Mankind Pharma also can deliver exceptionally good returns.
Okay, that's quite interesting. In fact, let's stay with some of those pharma movers. Shrikant, want to get you in on the charts as well, given that granules is the big mover today. And then, of course, we've seen the entire sector as well move. Anything that you're liking trade-worthy within pharma?
Yeah, I think see like all these stocks are really showing very momentum, strong momentum, and most of these stocks are rallying. Then thereafter we are seeing some consolidation, and again they are rallying to the and surpassing their previous highs. So one thing is very clear that there is like a specific buying interest in the sector, and it's an interest for a longer time, and it's not like something which is like going to end with the short-term tactical moves. But in that space, we like Natco Pharma as well as we like Biocon. Both these stocks are very close to their important support levels. So currently they are attractive in terms of risk reward ratio. Biocon is at 362, 363. So it's a buy at current levels with a stop loss close to 354. We are expecting stock to move towards 380, 390 next few days or few weeks. It will take some time, but it's a buy. We also like Natco, which is around some 1350, 1360 levels. And there also we are projecting 1450, 1500 sort of levels. Around this level, it's a buy with a stop loss close to 1330. So both the stocks are very close to their support levels. And I think entire pharma is something which is going to do well for in next few weeks.
One space which you are positive on right now, but auto is going to be in focus. Of course, earnings are coming in thick and fast, and we've got the number of M&M already. Maruti is also something which is on our radar, as well as Tata Motors. But what are the expectations as far as the month of July is concerned with respect to auto sales? That's the data we'll get tomorrow. Let me take it across to Shrishti to find out the expectations.
Well, for July auto sales estimates, we are estimating that the two-wheeler segment could be the outperformer in the month gone by. Apart from that, the other segments are also expected to post a healthy set. Why we are expecting that the two-wheeler could have the biggest push amongst the other segment is because of the rural as well as urban demand is expected to support, and for the upcoming marriage season, some of the pre-buying has also started. If we talk about the numbers, then firstly, for M&M Automotive Division, we are expecting a jump of just 3% on a month-on-month basis, while for even Tata Motors passenger vehicle as well as Maruti Suzuki, we are expecting a single-digit growth. So that's about the passenger vehicle segment. Not much is expected on this particular segment, but definitely the momentum should continue as per what we are expecting at least. If we talk about the two-wheeler segment, then this could actually show a double-digit growth for select companies when we compare the number on a YOY basis. Bajaj Auto and Hero MotoCorp are some of the companies where we are expecting 11 to 13% growth on a YOY basis, while for TVS as well as Eicher Motors Royal Enfield, we are expecting a single-digit growth, but the growth should be is expected to be seen on the positive side. When it comes to the commercial vehicle segment, then do watch out for Eicher Motors VECV, because on a low base, 17% YOY growth is what we are expecting, while for Tata Motors CV as well as Ashok Leyland, the numbers could be just flattish, but the good point is that the growth could be supported by the replacement segment. And lastly, if we talk about the tractor division, definitely a segment which has a lot of cycles involved, but for this time we are expecting 26,050 units for M&M tractor division, as well as for Escorts 5,650 units is what we are expecting, and a normal monsoon is expected to support the volume. So all in all, a good set of numbers expected from July auto sales estimate. Back to you. Right, Srishti, we'll leave it at that. In fact, let's get in the dealing room chatter as well. Sharad is here to tell us about what the stocks are being talked about.
Well, yes, in focus is Ajanta Pharma, and what we are gathering from dealers is there is a buying coming in from an FI desk. Now, of course, the results have also been very strong, and after that, the FPI buying has been coming in. That's what we are gathering from the dealers. Interestingly, the volumes have also picked up almost 4 times its 20-day average, and FPIs are holding currently 8.3% stake in the company. Also, the stock, if you look at it, is up almost 54% in the last 1 year. Now, in the recent con call, the company has given 2 upgrades in the guidances. The first one being the business mix is turning favorable for FY25. So they have actually increased their margin guidance by 100 basis points to 29%. And also there is a relief coming in, is the company has stated that there would be a the tax rate guidance that has actually come down. Earlier it was 26 to 27%, now it is 24%. So both factors actually auguring well for the company, and the company has maintained its emerging markets branded market guidance between mid-teens, and for the US business they are guiding a double-digit growth for FY26.
Okay, so that's about Ajanta Pharma. The stock definitely buzzing in the trading session. Zomato is one stock which will come out with earnings. Let me take it across to Vinny to get a sense as to what the expectations are, because the expectations are right, because the founder has just put a update on X or Twitter, and they're talking about something called District, which is coming up. Definitely tantalizes the curiosity, but we'll get to know that only tomorrow. Let's take it across to Vinny to at least get a sense as to what the expectations are from the numbers this time around, Vinny.
Yes, so from Zomato, we are expecting a revenue growth coming in of around 12% in terms of revenue, profit, a 34% growth, and EBITDA margin. This is the EBITDA margin we're talking about, 4.6% versus 2.4%. EBITDA, this is not the adjusted EBITDA. The calculated EBITDA, 183 crores versus 86 crores, on uptick, sharp uptick in terms of the EBITDA also is what we're expecting. Adjusted EBITDA, somewhere around 295 to 300 crores is the estimate that is coming in there. So let's watch out for that number. Strong quarter is expected in terms of the food business, food delivery side. Expected to see a delivery GOV of around 7% on a quarter-on-quarter basis, while in terms of the Blinkit GOV, also expecting around an 18% growth there in terms of the GOV, that's the gross order value. What is important to watch out for is in terms of market share trends in food delivery business, what is the competition there, the near-term outlook or trajectory that they have for FY25 in terms of EBITDA, net dark store additions, what's that for Blinkit, how is Blinkit's performance. Blinkit is expected to see a strong performance even this time in terms of overall growth. So will be interesting to see furthermore in terms of where the trajectory goes forward. But yes, a decent number that we're expecting from Zomato.
Okay, so that's the latest as far as Zomato is concerned. Of course, remember earlier there have been reports that Zomato and Paytm might be in talks for the movie and the events business. Not really sure if that's an announcement we should look forward to, but definitely something around District is coming. That's the word coming in from Dipinder Goyal, the founder at the company. Dipan, do you have a view on Zomato? Because the stock price has moved quite a bit, and even Paytm for that matter, which looked in the value zone some time ago, has now inched comfortably higher. What's the view on Zomato and Paytm now?
For Zomato, disclosure, we and our clients are invested, and I think that particular investment has worked out extremely well for a lot of shareholders. And I think company is going from strength to strength. The food delivery business should get solid into profit pretty much soon. And Blinkit, which is the quick commerce division, is getting more and more, I would say, valuation and more interest from investors, because that's one hot spot or high growth spot within the retail industry, and with very high entry barriers as well. And Zomato certainly has created scale and has created a distribution network and an entire ecosystem whereby they're able to grow the quick commerce division of Blinkit, and that eventually is going to add significantly more value going ahead as well. So very positive on Zomato, but I must say that there is one particular threat, that of ONDC. And if a lot of customers start to order food through ONDC, then certainly Zomato's business model can come under threat as far as the food delivery business is concerned. So we need to keep an eye on how ONDC is progressing, and then see what effect it has on Zomato. But look, food delivery and quick commerce, they are just really absolutely sunrise industries. And 5-10 years from now, these can be multi-billion-dollar kind of businesses. So Zomato from these levels also, if it plays out well, can deliver exceptional, returns going ahead.
Okay, that's that in Zomato. Kunal already at 230. Now what next?
Yeah, but I think the pace is slowing down for the stock in terms of charts. So maybe what we could be looking out for is very gradual upside for Zomato. Now it's very difficult to try and place target for stocks which run up into new high territories, because then what we generally rely on is the stocks studying the momentum for for itself and then trying to respect the short-term moving averages or the previous swing supports. I think in this case for Zomato, the near-term support for the stock is at 217 to 18 mark. So I think for traders who are holding on to the long positions, it's best to try and hold on to the stock, keep the trailing stop losses higher, and as now the stock continues to gain trend, if the momentum accelerates, that's where we typically expect the stock over the short term to try and perform very well. So far it's a decent chart. 217 to 18 could be a trailing stop loss for the stock.
Okay, just watching out for the numbers coming in from Maruti, and it looks like it's a beat versus expectation, both in terms of the profitability as well as bottom line. The bottom line on a standalone basis has come in at 3,650 crores. That compares with our expectation of 3,467, and even on the revenue front, I'm looking at a number of 35,531, and that compares with our number, which was around 34,770. So seems like there's a top line beat coming in for Maruti, and that's the reason the stock has seen a bit of a jump up. Of course, this is the trend that we have been seeing across the space as well, that there has been more or less good numbers come by from the auto sector, and given the fact this is a top line driven beat because the revenue has come in better than expectation, and then of course the profitability has also been good, overall the expectation is perhaps that the company has managed to deliver a decent amount of number even on the EBITDA front, because the EBITDA has come in at 4,500. We were working with a number of around 4,160. So that beat in the top line is getting reflected even on the margin front, because the margins have come in closer to 12.5, 12.7%, and that compares with the expectation of 12%. So it's a all-round beat coming in for Maruti, and that's the reason the stock is trending high by 1.6%. We'll try and get an analyst to decode the internals as well. But in the meantime, Dipan, do you have a view on Maruti specifically? 2% higher now.
Yeah, I think great set of numbers, and clearly it's kind of blue sky scenario for Maruti with decent volume growth now that all the supply related issues are sorted, and they've really covered up a lot of the order booking which they had earlier. Raw material prices have been pretty much stable, but I think the auto industry is getting into a soft patch, and one needs to be a bit careful and not be overweight auto. Although we ourselves are shareholders of Maruti and it's been a great investment, but I think next few quarters could be tough for the auto industry, and you could expect slowdown in the volumes as we have seen for the past 2-3 months. Eventually that will get reflected in the financials as well. So right now I think we are seeing a good trading rally in Maruti, but I would be a bit cautious and not chase this particular rally.
Right, okay, that's the take coming in on Maruti. An immediate spike up of 2.5% is what you're seeing on the stock. Interesting the way things are moving within the entire auto pack. But that said, Oberoi Realty, DLF, Godrej Properties, all of these stocks are sitting at their pretty much high point of the day. We're closing in with gains for an HDFC Life, for a JSW Steel, for Asian Paints, Granules, Staracom, Trent are stocks that we've talked about in any case. But Dipan, we'll let you go on that note. In fact, Kunal as well as Srikanth as well. Let me take it across to Abhishek Gaushinde and analyze Maruti's numbers better. Abhishek, hi, afternoon. And I guess looking at the numbers, it seems like a beat, at least as per the ET Now estimates. What are you? What's your first take?
Yeah, broadly, the numbers are appearing higher than our estimates. We were expecting a 11.2% kind of a margin, it's appearing 12.7%. So broadly, what we can assume that given that in this month the company has cut down the prices for this automotive gear division and has increased discounts on the promotional offers, along with launched limited editions for this Dream Series product. But despite that, the company has reported decent top line. So what I can guess here is that the share of CNG vehicles would be higher in this quarter compared to the previous quarter, and that has supported the ASPs and the top line performance, given that in the previous quarter company was facing some production constraints in the CNG segment. Second is that this UV segment, UV mix has been consistently maintained at 31%, so that is also supporting the ASPs. And third is that the raw material price hikes will be passed on to the dealers at a lag, so that reimbursement saving may also have supported this EBITDA margin in this quarter. Considering that in the previous quarter there was a 60 pips kind of one-off, but despite that the reported EBITDA margin are prima facie appearing a beat in the numbers.
Quickly, Abhishek, do you anticipate a big change in the estimates because the stock is trading at life high levels? Do you expect further uptick in the target prices that the analysts are setting?
See, broadly, the larger part of the earning potentials have already been factored in the numbers. So, stock is also trading at a 23, 24 times of its FY26 estimate. So, significant upside in the or upward revision in the earning estimates is quite difficult given that the industry volume growth for this year is still low single digit, one. Two, the EBITDA margin cycle has been consistent, but side by side, the inventory has been increasing in the market. So, market would like a significant change in the outlook of the management. If there would be a significant change in the outlook for the PV segment, then it may happen. Otherwise, the broadly the earning estimates or the valuation parameters will remain as it is.
We'll leave it at that. In fact, we're going to wind it up right here as well on this edition of Closing Trade. It's a goodbye from Manisha and me.